Good morning. It is 8:45, almost 9 o'clock UTC on Thursday, the 23rd of January. Anyways, going over Bitcoin, we do have some pre-market data coming out today, an hour before the New York Stock Exchange opens. Just make sure you double check that to see if there's some pre-market movement. I'm kind of expecting some stuff today, Thursday, Friday. Looking at the long short ratios for Bitcoin right now, we have aggressive stepping of longs. We've been kind of grinding down for the last 2 days or so. Skipped yesterday because we got the nice, really perfect retest kind of from our zone that we talked about on Tuesday. But yeah, still grinding to the downside. We're at some key levels to hold, and we'll go through those. Even low time frame, we're getting up here around 57%. People are still pressing the green button, so we're probably overdue for a little bit of a flush. And yeah, there's some stuff we can do down at like 91.5, 92K, stuff like that. But for the time being, we're technically still holding trend on the spot market. Looking at the funding rates are neutral, but under 0.01, which is good. OKX still the outlier with very, very low funding rates for longs currently. On the liquidation side, nothing too crazy, but again, the moment we start losing these lows, we are lining up for a big flush down to retest stuff lower. The structure at the high here looks very, very distributy. I guess it just looks very much like a distribution. And the moment we make a new low here, the real simple fact is you make a new low under 100K after making a lower high off of the all-time high, you're seeing trend change, right? And you have to target the leverage liquidity below us, 94.5s, and potentially lower down to 92. On the liquidity order book heat map, so we do have quite a bit of stuff right above us. About 450 Bitcoin lining up pretty nicely around 1035, 1036, kind of like underside retesting the lower time frame swing structure. So if we do have a local hold and a pop up, I'd be very interested in the reaction at 1035, 1036. Lots of layered in short orders across the books there, not just on Binance. To the downside, nothing too crazy. If we look a little bit higher time frame, the stuff above is just starting to get really thick and stacked all the way to 112 and then even 114, and that hasn't been really changed at all. The big stuff to the downside is still in play. The major holds are expected from about 91.5 down to 90K, where we're still expecting to hold stuff with nothing really of any importance below that. So we still have plunge protection in there at the lows. We don't want to lose 90K again in this bull run. However, it's still very possible as long as we're getting these big pushes down, and as long as these blocks kind of like exist above us, they're acting kind of like a bumper, pushing price down because large orders waiting above to get filled. So we'll see what happens if we have a break back up to 1036 to start retesting stuff. Trend is still down. We need to see a localized regain. You want to see something that gains back above 1028 to go up to 1035, 1036, and then we'll kind of reassess from there. On the order book map, just to show where everything's kind of placed, yeah, like I said, 103, what is this, 1033, 1034, 135. It's a little bit wishy-washy, but that's approximately where we're looking at quite a bit of those orders like we just saw on the other charts. And then below us down to about even 91K. So lots of layered in longs down here at this zone with the next layer down way below us. So we don't really want to get there. Currently, like I said, there's a big block holding resistance right above us. We'll see if we start sweeping that stuff. We should see a nice pop back up towards maybe 105, something like that. In any case, looking over at the chart itself, just looking here, I want to say that the local stuff is really the level we want to hold. Doing an underside retest the daily open would be kind of key. It's a swing test on the 4 hour. It's a lot of stuff, but we need to start closing some levels higher. The big thing here is the local regain, creating some upside potential, 102.7, 102.8. If you start closing the 4 hour above that, then we should see an expansion back up to like 103.6 to get some retests, maybe retest the daily open as well. If we have a continuation up, the next block is around 105. It's from about 104.6 to about 105.2. So nice big zone of retest where we can expect price if we have a gain of the daily open. But the local priority is down, right? We technically haven't made new lows on the 4 hour on the on spot market, which is good. However, we did have a cheeky little close on the CME. Where we did close below some 4 hour structure. So if I just put that on here, yeah, that's a bit of a sneaky little close there. I don't like it. There's some stuff to retest higher, 1035, 1036. What a surprise. On the CME market is still, I believe, trading at, yeah, it's trading in backwardization to the to the market. Is it? No, slightly at a premium, but only slightly so. So it's about $100 higher than the market price, which isn't a lot. Generally speaking, we'll see a nice uptrending price action. The CME will trade $400-500, maybe even $1,000 higher. But for right now, it's pretty close to the actual market. So there's a little bit of activity going on. That's for damn sure. In any case, the big thing here is you're still in a localized downtrend. If you break the low and start losing 4 hours below what we did at 102K, the problem then becomes you've made a lower high followed by a lower low. If you make a lower low, what are you seeing? Well, sequential lower high and lower low is the same thing as the sequential lower low and lower high. You're seeing trend change. So watch out. The distribution play is not invalidated. We're technically still holding trend. We're still holding higher lows. We want to see some aggressive regains. The only way we can get back above this is if we start clearing 105K and start grinding back up. Effectively, what we've been seeing the last lower time frame bits is lots of grindy downside price action. And grindy downside price action does two things. A, it gets people longing. So you get dumb money trying to long, trying to buy the dip while it's still trending down, which is why the majority of accounts right now on Binance, as we saw, are long. The other thing it does is it builds pockets of long liquidity and it traps people. So each level that we go down, you'll see pops and they'll go down, 0.7 to 1.4% based off of, taking that 100x and 50x liquidity. So local stuff's really clean, really simple. Lower time frame, you want to see gains above, just some local regains and see some tests back up towards the daily. That's going to be the first kind of real major regain. If we regain the daily open, we should see a move back up to test some of this high structure. But until that happens, you've got downside priority. So I'm overdue for a bit of a pop back to the upside to wreck some of these late shorts. However, you want to see a localized regain before that happens. To the downside, technically you're still looking for continuation. So the real play here is you're still expecting the continuation downside until you see a regain to retest higher. Make sure you're really clear that you want to see solid, confirmed bullish back tests of level to start targeting, higher structure. So that's it. Take it easy. Oh, and finally, just to double check, we talked about this on Tuesday. Yeah, we got the failure at the 107. About 80% out of this now. So this is good. It's easy money, grinding down. For this to change, what do you want to see? You want to see grinding up. Why? Because it traps shorts and then the price goes higher. That's it. Catch you tomorrow. Peace.